We've got an extension of yesterday's rally and Friday's session, which has been a pretty volatile week. We're ending on a positive note. I think there's a lot of optimism going on for this Santa Claus rally to kick off here going into the holiday shortened week. A lot of the late week rally that we've seen has been based on the data that we got, and this is based on CPI coming in below expectations. 2.7% on the headline, 2.6% on the core, the lowest since March of 2021. That lent a little bit more optimism for traders going in to that holiday shortened week. Remember, markets close on Wednesday at 1 p.m. Central Time. We're closed Thursday for the Christmas holiday. But today is triple witching. That might add some volatility to our session, even though we've got that VIX down near the 15 level. So that's reflective of a rally in the equity market. But towards the end of the day, we'll see. We've got triple witching, expiration across the board that might add a little bit of volatility into the market. So we'll continue to watch that. I think if you take a look at the data that's come out this week, that below expectation CPI, the jobs market, even though that unemployment rate went up to 4.6%, we got some comments out of Waller yesterday that they're more comfortable with the overall equity market at this point and valuation levels, even though maybe on a historical basis a little bit high. But heading into that holiday shortened week, there's a few things to key on for next week, and that's going to be some delayed data. We've got a GDP report that's delayed, durable goods order that's delayed, but then we'll have some consumer confidence, consumer sentiment data that just came out this morning, a little bit weaker than expected. That's been skewed a little bit, and it hasn't carried over to the equity market. So that one's been pushed aside, maybe some political bias in some of those numbers. So we'll push aside that consumer sentiment data, look forward to the consumer confidence number, which has also been weaker than expected, but not leaking over into the equity market. That's going to be the focus, but we'll see if this Santa Claus rally can continue into the end of the year. We typically get those rallies towards the latter stages of December.